Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral. We have with us Riya Singh, technical analyst, currencies joining in. Welcome to the show, Riya. Riya, let's start with the Indian rupee. It's declined the most in 7 weeks against the dollar right now. What do you make of this and how do you see it performing from here on?
Hello, Hiral. So yeah, if you look at the Indian rupee, we have been remaining bullish, uh, positionally bearish on the Indian rupee with respect to its strength for quite a week now, even at the start of the year. But the reason why it has declined so much in the yesterday's as well as in today's session after witnessing a consolidation phase was because of the wider deficit that India is witnessing right now. And if you look at the numbers that have been published, it increased by 26% to $15.7 billion in December, as compared to the year early. And imports, if you look at the overall import and export scene, it imports were have climbed 7%, exports have fell almost a 1% as compared to the previous numbers that was published. Now, why the trade deficit is putting a pressure onto the rupee is because the imports have increased drastically as compared to the exports. The demand for the rupee has fallen because during the import or the dollar is is remains into the demand to meet all the obligations of the import. uh, so I think this is what is worrisome for the rupee into the coming days and is weighing on the rupee. Obviously, if you look at the overall RBI operations now, even RBI want to promote the exports, the exports which have not been very good for the Indian, and has not been picking up as much as the other economic activities. RBI also want RBI as well as the government want to promote that, and in order to do that, rupee has to stay weak at least for few months in the coming days. So I think even if the whole uh, economic numbers and the inflows does improve, I think RBI will intervene in the rupee to keep it above the 73 levels for the coming days. Uh, there is a very much need of gaining confidence again into the market because even if you look at the perspective of the yields and so forth, it has not been able to go above 6. Inflation is also at a highest level, along with ample liquidity into the market. So I think going forward, rupee will support and respect the level of 73 to 70 to 80. It should be a buy on dips going forward.
Right, so biotips coming in with regards to the Indian rupee. With this, Riya, if you talk about the pound, it has been at a constant decline versus its peers. Are you expecting this decline to continue?
I think the Brexit deal is for the pound has not worked out very well because the deeds of the deal has not been disclosed to the overall to the overall in market and so forth. So the confidence is not coming forward from there as well. But if you look at the overall sterling, the lockdown that have been put forth, I think it has given a fresh blow to the economy, and there is a forecast that it will stutter along the way, and the numbers will again go into into negative. So this is what is actually threatening the pound's uh, strength right now. And going forward, I think if the extensions go beyond what is again laid down, and then there is a political pressure as well into the UK with respect to the Scotland, which has voted to remain in the bloc, if the UK leaves the Brexit. So there is an again a different political turbulence that the UK has to deal with after the Brexit gets done. Now the first uh, threat to the pound strength is obviously the Brexit deeds. What is the economic position the UK will hold after it leaves the EU? The second would be the lockdown measures that have been put forth. How drastically will it impact the economic recovery that the UK has seen in the past few months? And thirdly, obviously, is with the Scotland, the political turbulence, how the UK will deal with it. I think these three factors are what weighing into the pound right now. And going forward, I think it will remain under pressure. But as far as the uh, domestic pair for the Indian trade goes, I think the pickup is seen because there is a weakness into the rupee that is coming forward for the domestic currency. I think that is the major reason why the pound is seen to be picking up into the Indian against the rupee for the domestic trading. Otherwise, I think pound will remain under pressure for the coming days.
Right. And lastly, if you see in terms of Japan as well, they are next to face the extension of lockdown. So, what's the kind of impact you're expecting on their currency as well?
I think Japan, Japanese yen being the second safe haven, and if the lockdown measures does come in into the Japan, it will knock off at least trillions of yen into the private consumption. Now, yeah, Japan has fought very rigorously to get their economy out of the the contraction phase. But if the lockdown does happen, or there is a danger that the Japan's economy will again go into the contraction, and with the speculation that the GDP will, you know, sh- shrink for the current quarter at least in a double digit. So the economic impact is huge, and there is a state of emergency in the Tokyo. So going forward, if there is a lockdown that would be put forward into the Japan altogether, though the geographical reach is limited. It will be around Tokyo and the three other neighboring regions, and binding will not be so rigorous. But I think it will still affect the consumption and the overall economic growth. So I think it will have an impact on the yen, and the same I think we have seen in today's session where it did open with a gap down. So yen will remain under pressure for the coming days if the Japanese government go forward with the lockdown measures.
Okay. And what would be the strategies that you would recommend?
The strategies that one can look forward to is going short into the Euro INR below the level of 90.05. Uh, this was an important support into the intraday session, and if the euro breaches the same, and it will definitely go forward to test for the level of 89.80, 89.70 for the coming session. So you can short the pair below 90.05 for a target of 89. 85, 89, 70 by keeping a strict SL at 90.20. The second strategy that one can look forward to is going short into the yen. So go short into JPY INR below the target of 70.88. Keep a strict SL at 71.01, and you can maintain a target of 70.70 for the JPY INR. For dollar, I think dollar will remain strong against the Indian currency. So you can buy into the rupee above 73.45 for a target of 73.60, and keep a strict SL at 73.30 for the coming session.
Right. Thank you, Riya, for sharing those strategies with us as well and those views coming in with the currency market. Thank you, everyone, for joining in as well.